This stock review is for Tuesday, the 21st of February. We'll start with the market, looking at the composite. Composite on Friday dithered around, trying to decide whether it really does want to go higher. It's got two completely competing versions of what it wants to do, Wednesday and Thursday. Big, huge break right in the middle of Wednesday, and then an entire day up on Thursday. You can see that here in the 20-day. Here's the big break, and it went right back up, recovered all of it. Even closed higher to new 11-year highs. And above this point, as we've talked about for the past however many days this is, 2 weeks at the least, a little longer than that, every one of these has been a close higher than, for the last 11 years for the composite. But this is relatively weak here in this afternoon, and we could be coming back down. We may actually have the tops in. We'll have to see. Certainly wait for that. But you see here, this has been an uptrend line that it has maintained, and this might not be done quite right. This close here, I guess, could be considered below it. We've got two of those, two closes below this uptrend line within close proximity to one another, and breaking either of these trend lines, we could start the top over action at any time. But we could be coming down to touch this one from below again before going higher. Have to see what the open is going to be. But that's composite. Here's the 15-year. Composite is still above these prior highs. And back at this level, back in 2000, when it 99, 2000, when it had the craziness. The Dow, if we want to switch to the Dow for comparison, the Dow in 2006 and 7, went far beyond the 99 00 tops, but we're not quite back up there yet. But we are quite high here. This was a really big retracement. This was a deep retracement that we had back 5 months ago. But we still may be needing to come up to this trend line for a touch. So you can certainly see Dow 13.5 is not too, not too far away. I mean, it's within reach, I'm trying to say, if we want to just keep going up. There's some articles starting to come out about the Dow topping and some reasons for it not to be up quite so high, etc. So once those articles kick up, those can start to affect the market, and we might be coming down the next couple of weeks if we don't start right now. Start with Broadcom on the actual stocks. I've gone down to 20 stocks to evaluate here, so paring it back just a bit. Broadcom fell back below the important level of 38. So we see we definitely need to get back above this level to consider anything higher. What would this be? This is about 38.20. This is where that topped out on both the past 2 trading days. We still have had this effect of Broadcom breaking above a downtrend line and going higher that a lot of things have been showing. So we could still go up, but we could also very easily break this most recent uptrend line right here and be heading back down from 38 to try to test 37 again. We'll clear all this out, and you can just see that very easily. We may be needing to break this. Here's this uptrend line that has been broken. If we're going to go parallel to that, you can see what that might look like, with 38 being an issue there and 37.50 clearly being referenced also. So still good potential for large movement on Broadcom. Break this uptrend line here, we could very well come down, hit 37 quite nicely, quite easily. But it's still trying to decide, like most things. Nvidia gave back much of its rise. May come on back down below this line. You see right here, this is established by these tails in this extremum to the downside here. So we're right at that decision-making level here, and could have another big red candle down. Not sure why it opened so low after earnings. Something put it down there, so maybe it actually really does want to be down there. This reaction might have carried over from where it naturally would have been. Maybe it actually needs to settle in here between 15.50 and 16. So maybe it's done for a while, but let's take a look, see what it does. SanDisk is threatening to go back below this uptrend line that the tails have given us for the past 2 days, come back to touch the downtrend line above, maybe test 47, get close to both of those tomorrow if it's weak to the downside. But you see this is a pretty accelerated uptrend line, so it would need to stay above it. It would need a nice sizable gap up to move higher to try for 50 or 51. So it's not in a good position relative to this line for immediate upside unless it has a nice big gap up. If it's not gapping anywhere near that and is having issues maybe around 48, 48's right here, right above the close here. The close is about 47.80. If it's having problems with 48, I would say it's probably coming down to test one of these lines here, this uptrend line, this, the top downtrend line here, perhaps kiss it goodbye if it's going to go lower, or break through it, or come down to testing critical level of 47. This is not what I expected from SanDisk on Friday, given this nice strong breakout. Expected to go for gap closure. That doesn't appear to be happening just yet, certainly. It could with a big enough gap up and go, and if the market wants to stay strong. But those are SanDisk's levels to pay attention to right now on those lines. Here's X. Gave back some of the recovery from Thursday. Did it with a gap open and an immediate fall. It's back into a reasonable level for, sitting around for a while. So does it come back down to test 28, which was an important level? Or does it maintain and go higher off the uptrend line? Which would that be? Don't know. But there are the immediately relevant lines for various price levels at 29 and 28. And, don't know that X is going to be moving as much as it has recently. There's a lot of movement on a daily basis recently. It may settle down, but then again, it may just continue. Of course, one or the other. But you have to be wary that X might be a laggard for a while. I'm not sure what to predict about direction. It's going to be dependent on the open and on these types of trend lines. This was with the downtrend line it had maintained when it fell from 32. This is a parallel through the open from yesterday, so that could be operative for deciding what it's going to do on this side of this line tomorrow. FDX. FDX had a really bad day on Friday. It broke several uptrend lines. Has the potential to continue to fall dramatically. I don't know why it did this. I hadn't checked into that. Need to go ahead and do that. But you can see it was above a really nice horizontal level of support that you might have expected to have on that with this gap up. But it crashed right through it and crashed through the 90 just below down here, the 93 was 93.50 level, which was a level of support as well. So it crashed through two of those on Friday. So not good at all. That could definitely continue. This is a parallel trend line from this extreme point down here that matches this uptrend line that we have been above for nearly a month. If it starts breaking down here below 92, we could fall down to 90 real quickly. We might just tack on another red candle like this tomorrow onto FedEx. Something like this comes out of nowhere. Not completely out of nowhere because here's some red to the downside just prior, but this is bigger than any of those, and so it's kind of out of nowhere given how strong it has been. We could get another one tacked right on top of that one, similar to this right here. This big red candle down added another sizable candle the next day. It was going to continue up though, so it's not as big as the one prior. This is, I think, perhaps a little bit different situation. This immediately reversed a long-standing uptrend and could, tack on another one to the downside tomorrow. It also could arrest itself. It could do either. Have to see. Best Buy back down to this. What is this? This is 27.75. This level has been referenced in the past off this wick, most notably, and it very well could continue on up. This is a strong pattern looking for gap closure. We get back above 26 and this level here, and we could very well just start going. It's not happened just yet, but all of this is quite strong, and Best Buy could easily do that. Key levels 26 and 25.50 for breaking down. 25.50 would be quite below this accelerated uptrend line here, so you might not have to wait that long to determine downside. Just a breaking of this trend line could be enough. but we do have some shallower trend lines in here that could serve right around that region to serve as support and keep it from falling too far. That would actually coincide with the 25.50 price level, this uptrend line here. So if it were to fall below this uptrend line here that I have drawn, you might very well expect some real support on the coincidence of these lines, 25.50 price level with this uptrend line. So it might not fall very far, even if it does fall, and it could go very nicely to the upside if it breaks out above 26. AXP forging higher, had some issues on Thursday, gapped up, came down, closed at the close of the prior day. So that's pretty significant. You could certainly say that's going to be see that it might maintain above 52.50, essentially 52.60, whatever this level is, and continue higher. Let's look at AXP on a little bit longer term chart. This is at 6-month highs currently. As you can see, there's still plenty of upside for AXP if it decides it wants to get going. You've got some uptrending lines here that could serve as the top, but it's nowhere near those really. We could be headed to 55 and 56 with no problems, with just a little bit of upside support either from the market or even counter to the market. If this really wants to get up here, this is a very strong pattern. It could most definitely do that and take a third touch on this line here. This is quite a strong pattern, as you can see. It may not be time to fall just yet for AXP. Texas Instruments. Not a good day for Texas Instruments. Had its opportunity to shoot out and break above 34 and stay there with all of this green and all of this strength. Could not do it, and is now on this uptrend line, this quite accelerated uptrend line over the past 4 days. Could it gap up and go, shoot out above 34 and take off? Absolutely. That would have to be done on a gap, otherwise right from the open you're already violating this line. So precarious position, completely dependent on the open. Have to watch the open's relation to this gap. And we do have, if the market does get strong though, you can wick down, go back above a line like this and take off. So a lot of things could happen here, but a precarious open here below this uptrend line might signal that this run is over. For the very near term at least, need to come back and touch the 20 again and have some problems to the downside. But this is an extremely strong candle, and this has been staging upward after breaking downtrend lines the way a lot of things have been rising lately. So that could break out if that's maintained, keeps doing that kind of action. Texas Instruments here, as you can see, is building quite nicely, coming back off of 25. This is an impressive little run. And it does not look like this would necessarily be over. This is some congestion ready to move higher. So given what this looks like, I would say we are going to try to challenge these highs. We're going to hit 35. I do think Texas Instruments here very soon will break out of this upward stage of congestion and move on higher for a rapid rise, which would be very, very nice. So look for that on TXN. Caterpillar threatening to break once again. 114 is the critical level, closed on it on Thursday. This uptrend line that has been operative lately would be the key. It has been touching off of it and failing to break it. So if it were to break it, start closing below that, I think that would be a rollover. You'd have some real downside for CAT. It's been a real nice run for CAT, but 116 for CAT it's not very far away. It could certainly make a run at that, but you see we are near some topping horizontal support and resistance areas. Horizontal resistance there, support just below it. So it's been moving in between these two levels, 112, 114, 116 in here. So falling below 112 could definitely have some severe downside for CAT. This is quite accelerated, as you can see, but it might have a last spur straight up to 116 and maybe higher. So that's going to be very important. 114 for the time being is serving as certainly a big enough problem for it to break through in any substantial way. But you've got these levels here where you definitely need to see. It hasn't lived above this level at all, 114.57, 114.60. So once it starts heading above that, it hits 116 without any problem, I would say. So 114, any numbers of 114.60 anything or 114.70 anything, you're probably getting another dollar, dollar and a half off that. So give that a shot up. Otherwise, you're breaking some important uptrend levels here, and you need to pay attention to the downside. You can have a real nice hook back down very quickly, especially with the kind of gap down open tomorrow. So that's cat. Apple. Apple's having some issues. Kind of wedging here. You can see these trend lines here off this elbow from just before the earnings gap up. Good potential for lots of movement in a single day, clearly, at this with this pattern at these levels. But what that might be, predicting that, be a little tough. So you have a downtrend line based upon these wicks currently for Apple. If we're to break above that, maybe it could take another shot at 520, 510, 520. To the other side, down below 500, falling below 500, you might get a real nice kind of panic fall. People wanting to close out some profit from this nice little run up here, with Apple being at historic highs, falling back below 100. So we'll see. Google, kind of in limbo, channeling between, say about 603 and 612, 614. But getting rid of some of these, you can see good potential for a hook over here. Now we've had this run back up and this hook over and this nice tail down. The form of this is decent for more upside, and we got that on Friday. So we might be having more upside, drifting back above 610 and then shooting for 630, 640. So I think that is a highly likely scenario given this with Google maintaining above 600, trying to get back up here. United Health has not been moving much given what the market has done recently. So are we in store for a break below this uptrend line here, this very accelerated one? Possibly. It's also the top of this trend line. This is this channel, let's say, that earnings gapped it down below into this channel, came off the bottom here, created the bottom of this channel, doubled off of that, and off the 50 came back up to the top, is having some issues breaking out of it. This is at new 6-month highs, however, and back above the level the problem when earnings came out back here. And so at the top of this channel, could have come on back down, it could break out of that, could do one or the other, but UNH looks poised to have some large candles very soon, if not tomorrow. So 10-month highs for UNH, and in fact much longer than that. It looks like back in 08, so February of 08. So 4-year highs? Really? So UNH is at 4-year highs and back up in this region. So do we spur higher, get up $57.50, $60, challenge these tops here? Quite possibly. Quite possibly. And as you can see, it could certainly decide to do that given how strong this recovery has been and being at 4-year highs. Definitely could go higher. Picking a top in these circumstances, especially since there's nothing to really show what kind of top, what reference points might determine the top. You can see that that line right there could be very valid, plausible line right there, and we are at the tops if that's the case. We break out above that, you can see why it's been squeezing against that line perhaps, and could jam on up. But if it were to fall, be a little bit of a break in pattern, you've had this nice movement up, it would be an asymmetric extension here, not as far as this movement was or from 47.50, so that would be a little unusual. So I'd say probably more upside for UNH, especially if we break out above this. I think we would hit 57.50 or so, or head for this $60 here, 59.50, whatever that is, that top there, 59.50. So UNH. UTX, big problem 2 days ago, 3 trading days ago, has recovered that along this uptrend line given by this tail and this elbow tail here. So basically wedging, has a downtrend and an uptrend coinciding over here. Basically tomorrow it has no space here in the tip of this wedge, so expect something tomorrow from UTX, one way or the other. Above 84, important level here, or back down below here. There's a narrow range here that it's going to break out of one way or the other here soon, and probably do something significant. Maybe a repeat of this big candle down. UTX, I think, is, see where it's at in its uptrend. Could certainly go higher, but 85 was clearly going to be an important level for it. Its exponential rise to get to that level makes that a real nice candidate for an actual top. And you know, it was referenced further back here with a pullback. So 85, it's going to have trouble getting above 85. I'll say that much, and could very well begin dropping immediately and quickly tomorrow. Netflix is range bound and giving dojis day after day after day. So it'll wake up at some point and decide to move somewhere, but as you can see with this chart right now, that is not yet. And 120 has been a solid level of support, also 118. Those catching support from there has actually produced an uptrend line for the most part. And you have your downtrend lines, you can see several versions of them pressuring downward. Downtrend line and maybe a parallel to the upside channel, trying to move higher on that action, failing currently. So starting to move above this downtrend line through these wicks would be pretty good. And moving upward could take another run back at 130 if we've got some upside from the market, perhaps a little bit extra. Breaking down below 118. We also have the 20 down here below that. So for the most part, I would say we're going to keep going sideways, but at any time we could have a nice big candle up. With a proper open, we would have a nice big candle down. I think it would have to come off and open something that caused things to be disconnected from one day to the next for the downside for Netflix. McDonald's here is fanning out to come down from 102. Still has a downtrend line between this wick top and this wick top here just above 101, but as you can see, it has not been pressuring downward toward 97. There was a prediction that along this parallel line here we could be headed down to come to 97 based off this action here, this weakened action. That's not been the case. It's been two green candles up. This one is less than this one, but it's pressuring right at 100. So if we live above 100 again, that could be a signal after failing back below 100 3 times, rejecting going lower off this failure back below 100. Living above 100 again, people may consider, oh, okay, McDonald's really is excellent and strong. McDonald's is at 100, not 100, historical highs. So a confirmation back above 100 off this, trend line, not trend line, MA, back above 100, clear out some of this congestion and just move higher, stage higher. Maybe it's at 110 or 120. Have to see. Back above 100 is very significant for McDonald's if it is able to achieve that. GM, here's an uptrend top line that is potentially in effect here as it serves as an upper bound to this movement. This was earnings generated big pop. We could keep going up from that. It's petered out a bit. It has had a fantastic run up from this double bottom after the government purchased a large portion of GM. This is what you've got since that time. And as we can see, nice double bottom, moving all the way back up, 100% reversal on this drop here from this level. So we're back above that now. And how much higher could we go before actually stopping? A couple of these levels up here, we could certainly come up a little farther, but could very well weaken at any time. 28, 28, 50, and up here toward 29, 50, and 29. That's possible. I'm not sure what to think about it, but you've got some uptrend lines that falling back below them could be a real problem. We don't want to be back below this line, I don't think, after giving a pop that on earnings, it takes us above this trend line. I really don't think we want to be below it again. So that could serve as support and alternately show you where the downside is coming into play with a break. Qualcomm keeps going higher, gap up on earnings, just keeps rising, looking really nice. Not a lot of movement on an intraday basis, but you can see it's just moving higher and could very well be coming up to 70, 65, 70, trying to hit those. It gapped above this uptrend bound and is having no problem maintaining it. So I think Qualcomm may very well start to move quickly. Hit 65, hit 67, try to get up along this line here. This line may be in operation for Qualcomm, so if it breaks out above that, I do think it's moving higher. Like many things, it's very hard to call a top along some of these lines. This has restricted its rise for multiple days, but restricting it may be done with. That may be over. Have to see. Have to see. What is that line that I drew? I don't think that's that one. I think it comes from way back here. There we go. So we may need to be higher. Above 62. It's very nice. What else? Home Depot. Forging higher. Very nice. Home Depot could really take off. I think it's at historical highs, if not the very long-term highs. Here are very long-term highs. Moving up like a champ. Straight line, B line. It hasn't accelerated. Will it? Is it now accelerating? We're going to actually get some sort of exponential rise. Is it just bound and determined to get to 50? It could be. Very, very, very well could be. It might get there soon. And V, maintaining strength after this apparent peel over. The big up day on Thursday, V had a kind of a break and fall candle, but on the rather bad day on Friday, V was up. So are we going to continue higher for V? Don't know. Here are some operative trend lines that you might be able to factor in. It's currently being maintained between 114 and 116, kind of trapped in that region. Above either of those might signal something significant. So you'll have to consider that. Above 116, I think we challenge these highs here off this wick, which would be up here at 117 approximately. 114 below, could definitely come on down to 112, 110, start breaking this. This was earnings generated by MasterCard's earnings. This popped by Visa's own earnings, and it has maintained it, but it is looking a little bit weak, a little bit vulnerable. So anyway, that's it. No more commentary for this video. Good luck trading.